India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me Nigel D'Souza and Prashant as always. And what we've got is a fairly sort of calm morning and nothing unexpected. And sometimes, Nigel, that's not such a bad thing, right? Along expected lines.
Well, that's right. Surabhi, good morning. And in fact, if you wanted action, you've got plenty of it today. You've got earnings that are coming out there.
Yeah.
The global markets as well will be reacting to what the Fed had to say. There's the monthly expiry that plays out, and it's 2 days ahead of budget. So, fasten your seatbelts. You've got plenty of action in the next 2-3 days.
Already dizzy. So much going on, right? But at least the events are getting done one by one. So last night's event obviously was the Federal Reserve meeting, went along expected lines, no change in rates. Some volatility on Wall Street, a little bit of a sell-off, but then finally a recovery. So again, while the picture on the street was negative, there was red color, but it was off the lows of the session. So that's the good news. Lots to talk about today. Prashant, good morning.
Morning, Surabhi. Morning, Nigel. And Fed was a non-event, right?
Yeah.
Absolutely
Yeah.
non-event. It's very few times that you have a Federal Reserve meeting and, people are saying, so what? Is that kind of but it was expected that it's likely to be a non-event, and thankfully that's the way it panned out. So that's point number one, because there are a few other cues that we want to get through as well. Equities initially reacted to the hawkish tone of the statement, the Fed FOMC statement, because they removed the phrase "inflation is making progress." Yields went up, equities were down more. But then during the press conference, a couple of times, more than a few times, Chair Powell indicated that the removal was not meant to send a signal, a specific signal. I mean, the phrase inflation making progress, removing that is not a signal that inflation is not making progress. He then went on to explain how, the rental component, etc., is softening. That's the more sticky part, etc. So markets took note of it. Equities actually came back up, and I'll get to the price action in a bit. The other was mega cap tech earnings, which came through as well. And these are tentative stock reactions, all post-close. Microsoft 5 down, Tesla 4 up, and Meta about 2% higher. And I think over the next 1-2 hours or so, because there were conference calls which were happening, and I think the full import of what happened in those calls, etc., will come through. The number one talking point in those calls, of course, is going to be DeepSeek, and whether these companies which have guided for tens of billions of dollars in capex will need to pull some of that back. Because you don't need that much capex. As the Chinese have shown, you can do a lot with a lot less. So I think we'll have to. This is still an evolving story in that sense. This is, the change post-close, and those numbers are changing as we speak. Now, the overnight close of the main indices, S&P down 0.5%, Nasdaq about 0.5% lower. This is, of course, much improved compared to where we were at one point in the US session. Dollar, again, 2 days now, dollar is flat and the 10-year is flat as well, nothing at all. And of course, oil prices 0.5% here, 0.5% there, nothing meaningful, which then gets us to where we are here as far as India is concerned. So we saw follow-up buying, and we closed around the highs of the session, unlike the previous session where actually the market came off quite sharply from the highs. So 23,163 is where we left off. And I said this yesterday that, time for a little bit of sort of repair and recovery, and I think that is essentially what we've been seeing for the last two sessions, from the lows day before yesterday and from the start yesterday. So next levels for the Nifty, at least, just markers are 23,356, 20-day, and then the 40-day exponential, which is 23,600 roughly. These are the two numbers on the upside. And I don't think, for today we need to worry about the lows, but I think because there are big events, which can cause big swings, like for example, the union budget day after, that low still is in reckoning. 22,786 is that number on the lower side, which should not be broken. Nifty Bank closed around the 20-day moving average yesterday. So the pace has been quicker here because the RBI intervened on liquidity. The 20-day stands at 49,191. We left off about 30 points under that level. And the next number is 50,077, which is the 40-day exponential moving average for the Nifty Bank. Low, corresponding to the Nifty on the Nifty Bank is 47,844. So that's broadly the picture. GIFT Nifty will tell you what the open is looking like. It's absolutely flat, 10 points or so higher is what we have. Lots of individual stock action, which we will get to in a bit from now. Surbhi.
Yes, Prashant. Sometimes uneventful is good. I
Yeah.
think the markets had a lot of noise and news. So the fact that the Fed meeting was along expected lines and we didn't have too much of move in either equities or, treasuries or the dollar perhaps, that's quite okay. This morning, cues across Asia are thin because of the Lunar New Year holiday. Plenty of the markets like, China, Hong Kong, Taiwan, South Korea, most of them are shut or are, only partially working couple of hours. The big ones are showing up a mixed picture for the time being. Australia is the one market that's been trading, and the other one's, the Nikkei in Japan. And those markets have been extremely range-bound. Nikkei is absolutely flat. Australia isn't doing much either. So not too many cues from Asia. Which brings me to the oil markets, actually. I was watching the oil inventory data out of the US, and there was a drawdown. Stockpiles were, however, still higher than what was anticipated. And that's been the case last couple of weeks. And if you map what Brent has done, yesterday oil was, by the way, down over 1%. Now this morning it's flat. If you map what oil has done in the last 2 weeks, it's quite dramatic. Brent oil moved from a high of 82 to just about 75 now, which is fantastic news for us here in India. That's an 8-9% drop in a matter of 2 weeks. So pretty significant. So let's keep an eye out on that. Coming to the situation here back at home, yesterday was a much needed relief for the bulls, a day of recovery and a very broad-based recovery. It wasn't just the Nifty, it was spread across sectors, it was spread across market capitalization. The mid-cap market did very well. We had the market, thumping the table on good numbers, and we haven't seen that in a while. So numbers made you feel good as well. And the bulls will hope for more of that. The only caveat is today is Thursday. It is not just weekly expiry, but it's also the monthly expiry. So brace up for some volatility, especially in the second half of the day, perhaps. Let's come to the flows picture. FIs are still selling. Nothing has changed here. Almost 2,600 crores of selling yesterday, and about 1,800 crores of buying from the domestic institutional side, which is telling you that yesterday's recovery was hinging more on the other category, the unmapped data, so to speak, individuals, large HNIs, family offices. Perhaps that's where the money is also finally beginning to come through. Lots of results in focus, and just sort of a quick curtain raiser to our top 10 segment. On Bajaj Finance, people are going to now argue. They've guided for lower growth next year. They're talking about 25% AUM growth. And a minor sort of, increase in the gross NPA levels, slight increase in credit costs. So let's see how the market deals with this. Tata Motors is an operational miss. There's pressure on the margins, not looking too good. But at least they're retaining their targets on JLR in terms of turning net cash positive, etc. So let's see. Blue Star is strong. It's a good set of numbers. You'll hear from the management on the show as well as we go along. And the margin beat is almost 40 basis points. So it's looking really good. Voltas is a miss because their unitary cooling product segment, which is basically their AC segment, the revenue is fine, but there's a serious pressure on margins over there. So we'll try and find out what went down over there. And SRF, very interesting. I'll watch for the chemical stocks because Nigel had flagged this off yesterday in closing bell. A couple of the chemical stocks like Deepak, as well as Ami Organics, I think it was, they all came out with good numbers. Now SRF is keeping that trend intact. Good numbers from this one after a while. So let's see how the market reacts. So I guess a lot of individual stocks in focus, but Nigel, then it's also expiry day. Anything can happen.
Well, that's right. And the thought that came to my mind yesterday, because it went viral, was the great Rakesh Jhunjhunwala, what he used to say, right? When a stock doubles, you need to have patience out there, and you need to have conviction. But when it halves, you need to have the stomach to take that.
Yeah.
So you need to take the blows if you want to have those multi-bagger. Just thought I'll put that on board as well. But today, well, it's a big day, as you said, weekly expiry. But before that, the government intent is giving you signs that maybe, in fact, this budget could actually be good. And I'm just latching on to something that came in from the Finance Ministry overnight. They said that they have approved a scheme to strengthen the MSME manufacturing sector. Well, you could say it was expected. Well, you could say that, in fact, it's only been approved. But at least it's giving you that intent that the government is focused. The government is focusing on capex, on the revival as well. And they're noting that there could be a bit of a problem on ground and they need to do something about it. So that's raising hopes that maybe this budget 2025 will have something to offer both for the economy as well as the markets. Let's get to the data points then. Today's the end of the series. The January series hasn't been a great one, but we have pulled back from the recent lows in the last couple of trading sessions. We're going to end with a cut in all probability. But can the bulls end with a flourish? They'd like to do that. So we'll have to keep an eye on that front. Rollovers a little bit higher, both on the Nifty as well as in the Nifty Bank in comparison to the average of the last three series or so. So both of them come up for you on the screen. What do the FIs do? Well, again, the net short positions have come down. But as I've been saying, there's an element of short covering, yes. But there's also that element where, in fact, the lot size has been regrouped. And for the next month, for example, the Nifty lot size will be 75. And for this month, it's around 25. So that's why that element of, of a change in lot size as well is in there. Shorts continue to remain at around 75% or thereabouts. So these FIs are still net short. If you can get some positive news, you can get some couple of announcements coming in there, monetary policy as well as support in the budget 2025. These FIs are going to get stumped on the wrong side. That's the hope, at least as of now. Options data comes up for you, and the nearest two strikes that were active in trade yesterday, they come up for you on the screen. And since the 23,150 call was fairly active, the levels on the upside are very, very important. So the Nifty Bank yesterday did quite well. It clawed up close to around 300 points or thereabouts, and it ended at around the 20-day MA. So that's important. You'll want the Nifty Bank to build on from here. While the Nifty, it's around 150, 200 points away from its 20-day MA. The bulls would like to get closer to that mark. So these are the crucial levels. The recent lows become your reference point. But as I said earlier, the intent coming in both from the RBI as well as the government, I would take that as a positive. If we are seeing a slowing economy, you want the intent to be positive. And that's precisely what we've got.
All right, Nigel, thanks very much for that.